Welcome to Trading Lounge and the crypto Bitcoin Elliott Wave report for the 4th of January in the new year. And I'm going today look at two counts. One is the conservative count, and one count is looking at higher ground than what we're looking at here at the moment. But even with this count here, let's just talk about this for a moment. We're in this trend here from the beginning of March here, and I'm looking at this as wave 1 and 2 here, and wave 3 here, and wave 4, and then pushing up for wave 5. So because the extension's in wave 3 here, then wave 1 here and wave 5 can be roughly the same length, give or take a bit. But still, even once we finish this 1, 2, 3, 4, 5 here, that will leave us at the third wave up here. So the third wave can pull back 38.2% for wave 4 here, and that will look at this move here as wave 1 here, and wave 2 here, and then wave 3, 4, and 5 moving even higher up at that point. Then we've also got this wave 1 and 2 here as well. So once we finish this one here, even conservatively, this will bring us back into the 50 and then take us up into the 80, or somewhere, may even extend up higher at that particular point. But this is the conservative structure. Now, the market has caught me out a little bit by going so parabolic through all of this here, but I've just kept counting the waves and just kept labeling them as I saw fit, and we'll be looking at that next. But the other count that I have, if I can just go to, and I'm really just focused on this other count, I'm really just focused on from this low here to where this is here. So with the next count, we're looking at wave 3 being further up into this space up here. So let's go and have a look at that. So from this blue wave 2 low here, we've got, looking at this here as wave 2 here, then wave 1 here and 2 here. So we're looking at a bigger picture going to the upside here. So that would take us closer up into well, just a lot higher than where it is now, that's all. So we can look at this wave 2 here to this wave 3 here, taking us up into the 65,000 area at that point. Now, that's looking at it with an extended third wave in play at that point. So it's possible, and it's good to have a look at these things. We are seeing increasing volume in the trend in the right places here with all of this, so that's all good. Yeah, so if we just take a closer look at this one while we're here, I'll just go into an intraday version of this here. So even to get to this wave 3 here, then we'd still have the top of this wave 3 and then the top of this wave 3 to go as well. So just bearing that in mind. Let's go into the intraday here, and so picking it up from well, let's go back a bit further. Let's go 1 and 2 here, and then 1 and 2 here. So we've got this minor wave 2 here going up for minor wave 3 here, and then minor wave 4, and then minor wave 5 to get to intermediate wave 3, and then we'll have intermediate wave 4, and then we'll have intermediate wave 5 at that point. So they'll all need to be adjusted accordingly, but it'll be up in that space there. But I just wanted to look at the bigger picture here in more of an expansive way. So in this case here, we would just simply see the market that's not what I want. This trading platform that I'm using had a major upgrade, so a lot of the functionality has changed a lot. So that would just take us up into this one here, and then we'll have a little correction across the 40 and then up into the 50 at that stage for this. So I need to remove that because they will basically get displayed on the lower intraday charts. But anyway, that's just giving you a bit of picture. So today what we're going to be looking at is we're going to be looking at this market possibly moving up higher and where to get in for that. But we'll also be looking at this in terms of a top being in play here. So if I just go back to our normal count, which is a bit more boring, but so in this case here, let me just M for move. So we're looking at this as a top here, M for move there. So slight adjustments for all that. So we're looking for a wave 3 top there. So with this one here, the 38.2% retracement level from wave 2 here to wave 3 here, 38% comes in around the 25,000. So, well, I just have to say that because that's technically what it is. So if it fails at this point, it can come back to that point. I would probably say that it would be further above that. It'd be more likely sticking to the 30,000 here. So normally when we look at the trading levels here, we normally look at 3 types of patterns, and most of the time when we're looking at patterns, if I can just bring this back into the 4-hour chart now, just so we can get a bit of a grip on this here. So we can see here that the market never really stopped at the 30,000. So normally we would look at, I'll just go through this because I think it's hindsight is good if we take note and learn on things. So normally we'd look at this particular pattern here, the classic trading levels pattern, where we have the arrival here, then the reaction here, and then the first high above the level. And then we've also got a variation on this pattern where it doesn't drop back below the level here in this case. So we're really we could look at it that we do have this well, we've got this move back here so far, but we never really got this pattern here. So what I normally do is the third pattern that we look at is what I call the overshoot pattern, where it doesn't stop at the level here. And just as a rule of thumb, the distance that goes above here will be the distance that goes below the level above along this 30,000 area. So that's just something that we could watch for. And also what I find too is that if this is the case here, let's just say that the market comes back here, just humour me for a moment. So if the market does come back here, what I normally find is that this 30,000 or this particular line through here becomes the balance point. So if we're patient enough, we normally see an opportunity to move back in on that balance point there. But at the same time, because we're up high here, we also need to be mindful that the market can just continue to move to the upside here. So we need a strategy for that. So we just need a strategy for that, and I've got one here which I want to talk about a little bit. But just before we do that, I'll just talk about me for a moment. About what I've done with my trading on this here. As you know, I've been building in from just below the 10,000 there, and I've just been building in all the way through here. It came at Christmas time here. I couldn't put as much money in as I would have liked to because of Christmas. I've got cars to register and Christmas presents to buy and all sorts of things. So this was just a bit of a side event for me for all of this. But in a nutshell, I think I've put in 72,000 now for this, and I think I'm somewhere up about 60,000 in profit now for this. So it's returned about 90% of my money so far on this trade. So, but I'm just going to hold it as I've said before, and I have started. I put in some last week, and I'll put in some this week, and so on. And yeah. So look, I'll just see how I go and just keep dollar cost averaging. I've got 3 Bitcoins, and I would like to get 4. And I was hoping to get them all around the 30,000 here, so I'll just see how if this market pulls back. I might move over into ETH. I've also started to buy very small amounts of Ripple XRP on the current lows, and I'm hoping that it will go down to 0.15, and then I'll buy some more there. And this week, hopefully, we'll have a look at Ripple. and I'll show you what pattern I've got for that as well. Also too, I've moved my Bitcoin into cold storage now, and then they will go into a safety deposit box at the bank that on a Nano X, I've got that, or Ledger Nano X. So cold storage, and they'll just go into into a bank safety deposit box, and that will be that. Let's talk about this for a moment. So we've got two things that can occur here with all of this. Is that, well, we just need strategy. So we've got a situation here where I've got wave 5, because I've just been counting. Let's just go back a little bit here. Sorry to this wave 4 here. I've got this as wave 1 and 2 here. A bit of a large wave 2, but I'll stay with that. And then I can count 5 waves here quite nicely for wave 3, and it's got the right length in it compared to wave 1 here. And then I have to look at this here as 1 and 2 and 3 and 4 here, and then 1 and 2 and 3 and 4 and 5 here. So we've got an extension in the 5th wave here. Like I said, the 38.2% retracement levels down here. And we've got the overshoot pattern coming into play here. So normally what I'd say, if you know me in the trading levels, then if we're looking at 30,000 here, which is just trading level 3 to me, and then we've got group 1, which is 1, 2 and 3 here. If we get support on top of 3 here, then we can go long from that point. So we're either going to get support and we're going to be going long from that point, or this is going to fail to get support here, and we're going to look at that in a moment, and then we're going to see a correction down. Now, as I mentioned just a little moment ago, is that, let me get this tools working properly. So, okay, so roughly the distance above there, let's just get that right there for a moment. So the distance above can be the distance below it goes, just as a rule of thumb. So that brings us back into the 38.2% retracement level here, basically. We've got that little gap there and so on. So we just need to be mindful of that here, because if that's the case, then we'll get this ABC correction for wave 4. If we get support on top of this level here, then we're going to be pushing up from that point. So let's go in and take a closer look at this sequence here. So I just want to go over the count so we're on the same page. So I'll go from this blue wave to here where we've got 1 and 2 and 3 and 4 and 5. I'm happy with all that count. That's all perfect. And then the next count we've got to the upside. We've got wave 1 and 2 here, and wave 3 here, an A and a B and a C for wave 4 here. Then we've got 1, 2, 3, 4, 5 here for 1, back for 2 here. Nice strong third wave here, fourth wave here, and then a fifth wave coming into play here. So we know that we're in a parabolic move, so the market can just continue to the upside. So we need to be prepared for that. We've talked about having trades down here before. I've had the stop here, and I'm just going to move the stop up really tight here, because if the 32 here, the number 2, the way I see it, just the number 2 within group 1, 1, 2 and 3 here, if the 2 becomes the retested resistance, then the market's going to be pulled down to the 30,000. If it's going to be pulled down to the 30,000, then we're likely to see a bit of a bounce and scuffle on there and try to cover that gap and all those sorts of things. But that 25 here is roughly the 38.2% retracement level, so we need to be mindful of that. So this particular pattern at the top here, we can see that we've got the first move down through here, and then we've got this move here, which is the second high here. This move here does appear to be corrective as an ABC pattern here, but we could go, normally we would look to go long above that high, and we could bring it down to that high, and then we bring it down to the second high here, don't we? So that's where we can go long from at that point. If you wanted to refine that, and then that stop here now can go under that low here for that. If you wanted to refine this entry here, you can do that on the 34,000. So we could look for a classic trading levels pattern on that 34,000 there. I don't know if I've got anything on the tick chart here, but we'll just go in and have a bit of a look at that. I'll have to bring more data in here for that. Let's just... I won't go into all the squiggly stuff, but what you can see here is across this level here, which is the 33, which is really important, because if the top of group 1 finds support, right, then what it's doing, it's separating itself from the order flow of the closest largest number here. So that's where we look to go to long from. And this is a classic trading levels pattern where we have the arrival, the reaction, the first high above the level, then the corrective pattern here. So that means we normally go long above here, and then here and here. So on that normal picture that we use, which is here, if that's the 33,000 going across here, the top of group 1, then we've had the arrival, the reaction, the first high above the level, and we've had this ABC pattern here. So I'm talking about going long above wave B here. Now you could go down here further and drill in, but this is the high that we're going long on at that point there. So it's this one, it's this long, it's this little guy here that we're looking to go long on here. But what I was suggesting here is that we could also bring in 34 there, because that's right on 34 there. We could also look for a classic trading levels pattern. I can draw on the tick chart on this side now. Oh, that's good news on this new upgrade. So you could look for a pattern like that and then go long over here. Now that would be a safer trade. You can also do the same thing again, if I can copy that and go to the 35 here and do the same thing again. So there's two possible positions that you can build in on this. And if it goes up there, well, then you can go long at that point there and just building into that. And like I said, the really important thing about this 33 here, if that finds, if that develops the support, and by taking out these highs here, that just helps confirm that we're going to be going higher. But what it really does is it tells us that we're not going to be coming back to this level here. This is like a big magnet, this number, and it's trying to pull this down here, and then this is the line in the sand here. So the more support we can see here and on here and here, they're the places to go long on, because they're just the right places at that point. And also be mindful that obviously the 40,000 is the next number going up here, but in terms of all of this, between 3 and 4 here, we count to 10. So we've got 1, 2, 3 here, and then 5, and then we've got 8 here. So that we can copy this here and put that 8 in there. If you're working with 8, then you'll have 65 in there, so 36,500 and 37,020 in there. So that's all of group 2 in there. So you know that the bid's going to be hit here at number 8, but it should push up further than that at that point. So that's how we're going to go long as a trade. If the 32 becomes the retested resistance, then you know the market's going to be pulled down from that point. If you're long already and you want to protect things, well, your stop can go just under here. And at any stage, if this becomes the support again, then go long again from that point. Alrighty, I'll leave it at that for the time being. We can just recap this here. So on the two scenarios, so we've got, this is the conservative count, which I'm always happy to work with, because I always like to work from the bottom up, and that way I don't get so disappointed about things. So if we get support on that 33 there with that little pattern that I just showed you, that means that we're going to be going higher at that point, and we'll push up into 35 is the number to watch, and 38 is the number to watch. Getting support on 35 will pretty much seal it that we're going to get to 38 at that point. 8's a profit-taking number, so we'll see the market bids get hit at that point there, and we can expect a correction there as well. Now, this is the conservative count, and then we're looking also at the extended third wave scenario here, where that just takes us up into blue skies at that point. So in this case, we can look at this taking us up to 40,000, having a correction at that point, small or large, I don't know, we'll have to work it out, if any, and then we'll just keep working the count up at that point. I won't go into details at this stage again with this, but we'll look at this on the intraday. If we make a new high here, then we'll start looking at that intraday point of view there. So that's it. I guess in one way or another, if the extended third wave case comes in, we'll end up this year here much higher. We'll end up sort of up around the 80 or the 100, maybe up into this space. If it's the conservative view that plays out in this case here, then it's likely that, you know, if that's 2020 from here, from here to here for that, what we could say from this low here, being the top of the third wave here, we could say that we're just over the halfway mark in terms of 1, 2, 3, 4, and 5 here. So if wave 4 does come into play here, it may be quite time consuming. So we need to be prepared for that. So if this is going to be time consuming here, I mean, look what happened to gold. You know, that got really quite caught up in a fourth wave and quite time consuming in that point. So we could end up, if this is correct here, we could end up with being stuck for time in here. Probably, anyway, I'm just saying. And then up into this space. So that wave 1 here took that amount of weeks to get there. So that could, wave 5 would be roughly the same. And then we would fall into this wave 4 here as well. So down here we've had a series of 1s and 2s up in the end of the trend, because each trend has got a beginning, a middle, and an end, and this is obviously the middle here. So this is the beginning here. So the beginning of the trend is just as time consuming as the end of the trend. So in a strange way, we could end up being back, you know, in this wave 4 here before the end of the year, you know, at the later stages of the end of the year. Now, obviously, this could just make a mockery of me, but I'm just pointing these things out so we can, you know, they don't have to be right or wrong. I'm just pointing them out as possibilities. So we know that there's a lot of commercial money moving into this tulip fever market. So we need to be aware of all sorts of things. But we won't get trapped as well, because we're experienced. What happened in this area over here, where JP Morgan in September the 13th or something, or somewhere in there, said that Bitcoin's a scam. And now they've got a price prediction at 650,000. You kind of wonder if they've ever done their bloody homework, you know. So we'll always just take it step by step. But, you know, if we get this sort of bear markety thing coming in here, we won't get trapped. We'll be well aware of what's happening at that time. We may not be able to preempt it, but we'll certainly know when it's actually happening, and we'll be taking action on that in that particular point in time as well. Alrighty, thanks for tuning in. Cheers.